As the JSE looks set to start upbeat global sentiments this morning, with risk assets welcoming signals from the U.S. Federal Reserve overnight that suggest the worst may be over in terms of interest rate hikes. Makwe Masilela, Chief Investment Officer and founder at Makwe Fund Managers, joins us now to unpack the latest market news. Very good morning to you, Makwe. Thanks for your time. Give us a sense of how the local index and rand are faring in early trade this morning.
Morning, Impo. The rand, just like the JSE, they're having a good day. The JSE itself opened up 1% after closing flat yesterday, and all at the back of the less hawkish Fed, which as a result we've seen the trade in the US dollar and the yields down, and then as a result commodities going up, because if the dollar is low, it makes it cheaper for holders of other currencies to be able to afford those commodities. And at the same time that we've seen benefit in the rand itself, because the US dollar has been weakening, and also higher commodity prices continue to benefit the rand, as the rand itself is a commodity currency.
Now, based on the U.S. Federal Reserve's utterances overnight and the U.S. GDP numbers coming later, what does this data tell us about the global economic outlook?
Outlook not looking okay. Starting with what the IMF said. Number one, they downgraded the economic forecast, for the global economy. Yes, they did manage to say the South African economy will tick up, but the reasons were that they were worried about inflation, slower than expected the Chinese economy, the Russian-Ukraine issue, and back home here they're saying, okay, we'll do okay because of high commodity prices. But if there's a recession in other parts of the world, the likes of China, which are the ones who are buying most of our commodities, then economies are not growing, then definitely those commodity prices will go down and ultimately will affect us. And we know that because of the interest rate differential, other central bankers will want to close that. As we see the Fed continue to raise rates aggressively, they'll also try to do the same thing so that they close that gap. Because if we don't close that gap, then definitely we will have some capital outflows. So it's not looking okay, and definitely we are on the brink of a recession.
Yeah. ArcelorMittal South Africa reported that its headline earnings are up 22% for 6 months, ending the 30th of June 2022. Talk us through that performance. What does it look like?
That's very good, because if you also see the net finance charges are down 44%, the dollar price when it comes to steel up 23%, and also when you look at their net debt position is down 61%. But we need to remember something. The long-term investment case for steel is still there, because steel itself inherently is very vital when it comes to low carbon circular economy. So there's still a case for steel going forward, and demand is also starting to pick up.
ABN Bev South Africa also posted its second quarter and half year 2022 results. How have they fared?
Revenue up nicely, 11.3%. Volumes not too impressive, up only 3.4%. And with own beer volumes up only 2.7%. And non-beer volumes, they're up almost 8.2%. I don't know whether that is a signal that people are starting to move into the likes of cider and otherwise. And also bearing in mind that the guys are also having a competition from the likes of the sports betting companies. Because if someone has got 50 rand or so, the first thing they think of instead of buying a beer or a cider is to say, can't maybe I try to double this by maybe betting on some sports. And yes, we've seen their adjusted or their normalized EBITDA is up 7.2%, but their profit as well not too bad, because headline earnings per share is up almost 15%.
Very well. Thank you so much. Let's leave it there for now. Makwe Masilela, Chief Investment Officer and founder at Makwe Fund Managers, giving us a sense of how the latest in the world of business is looking like.